Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Steve, I'll pass the ball over to you.
Okay, great. Thanks, Jack. Let's see. I'll take it back. Jack, I think you're going to have to move the slides, because otherwise if I take it back, then I'm going to lose the desktop. So I'll just tell you when I'm done speaking on each slide. Sorry about that.
That's okay.
This is just a basic chart you're all looking at, and this is one of the pairs that you can trade. As Jack was talking about, obviously the yen has rallied quite a bit, although this is the dollar versus the yen, and you'll notice, as Jack was saying, that recently the yen has not performed as well as it did earlier in the year, while it's actually been trading in a in a sort of a range, and it bottomed recently in that 89 level, and it's rallied up to around 91 or so. So if you're looking to play a dollar rally, you'd be looking at calls, a call spread, maybe selling some puts. These charts are courtesy live vol. You can see that they give you all sorts of neat stuff, like the implied volatility, the actual intraday trades up in the top right, and then they even give you volatility on an intraday basis. There's lots of really cool stuff there. But this is really the one pair where the dollar hasn't completely broke down against, and I'll show you the others. And as Jack was saying, he likes the Canadian dollar, and I guess I'll give you a graphic representation of what he's looking at, because here we're looking more of a neutral trend, and maybe even a counter trend back up into the 94, 95, 96, 97 range. But some of the other pairs for the dollar, this is the dollar's perspective, look a lot worse. Jack, let's go to the next one. Jack, can you push it next slide? I don't think I can do it.
Steve, I'm sorry, Steve. You don't see that?
Yeah. I still see the yen, YUK. Did you move it?
I did.
Oh, shoot. Let me see if everybody else is seeing the correct chart. My computer might be frozen here right now. So,
next one, the euro?
Yeah. Unfortunately, I'm frozen here now, Jack. If you just want to just take it, I forget what the volatility is. If you just don't mind going through a brief synopsis of what that EUI looks like. I'm frozen here.
Okay. Can others see that chart okay, the euro chart out there?
I'm not getting any response from anybody. Maybe I'm just frozen. Do you see responses?
Okay. I don't see them either, because I'm looking at the
okay.
the keystone tops here today, ladies and gentlemen. I'm sorry.
Why don't you just comment on it? We can go forward. Oops. No. Oh boy, I lost the
okay,
whole,
let me go ahead and comment on it. I think hopefully they can see the charts okay. This is the euro chart up here, and this is the U.S. dollar versus the euro chart. Again, you may be more familiar with the euro going up against the U.S. dollar, but in this particular chart, we see that this is a pair of the U.S. dollar first against the euro. So as this price series is going down, the euro is actually appreciating on the ISE in this particular option. You can see very clear trend continued, and what's interesting about this trend, it's a fairly tight, orderly trend down here in this pair, which means, again, if you think about it, it's an appreciation of the euro. And this is part and parcel to the idea that the U.S. currency, in this implicit bear market, being very so-called orderly decline makes the U.S. government not concerned whatsoever. This idea of benign neglect, the idea that they're sacrificing the dollar in order for global growth, and therefore there's no concern, and the only concern may come in if we see this get out of hand and some type of spike down. So it continues to give people confidence to trade the euro because it is the other alternative currency, and it's a pretty clear trend down here. And as I said, the euro was above 150 on the euro versus U.S. dollar basis. It probably made a new low today on this particular chart. Next chart here is the U.S. Canadian dollar, and on here, and you can see that move, U.S. Canadian. And again, on this chart, as the price series goes down, it means the Canadian dollar is appreciating in value. As the price series goes up, it means the Canadian is weakening against the U.S. And you notice that move here at the end of the chart. You see a pretty big move bounce up there, and that's what I said earlier. The Bank of Canada came in and really trashed their currency because it was getting too strong. They're very much afraid of their currency being too strong against the U.S. dollar. But if the commodities demand continues out there, or even if the perception is that it continues out there because of China, the Canadian currency is going to tend to do well, and that's exactly what we've seen. But as I said earlier, this big bounce up here from the sneak attack from the Bank of Canada may be a good opportunity to get back in here because the other commodity currencies are into new high territory. Ultimately, if this game continues, we think the Canadian currency could catch up. So in this case, you'd look to be buying a U.S. dollar, Canadian dollar put here if you think it's going to continue back down. If you think the Canadian dollar is going to continue to weaken here against the U.S. dollar, you'd look to buy a Canadian dollar call in here, maybe using something like one of those simple moving averages there as kind of a trigger. It's hard to say. Needless to say, moving averages are very good in retrospect, but maybe you look at it as some type of resistance point. If you look at that red line recently going down, moving average, you see the Canadian price series coming up, testing that, getting slightly above and coming back down. So maybe we look for the Canadian dollar to come up and test that and start back down. Maybe a good opportunity to buy a put in U.S. Canadian dollar.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.